Hi guys, I'm back. Okay, sorry about the technical issues. Let me know. I'm going to give everybody a few minutes to hop on. Please let me know if you can see me and hear me. Okay. All right, cool. Sounds like we're good. All right. So, welcome to the webinar. Now you can hear me, now you can see me. Let me know throughout the webinar if you're getting value from this, okay? I know you're viewing it on YouTube, so make sure that you comment below the video so that I know that I'm providing you with the most value, the best value that you can get, all right? Let me know. Also, if you're not subscribed to my YouTube, make sure you do so, because when you do that, you're gonna get alerts, okay, when there's a webinar that has started. All right, so welcome to the webinar. Make sure that you take a pen and paper out, because I'm going to be typing notes on screen as usual, so that you guys are going to be able to walk away feeling confident, all right, about your finances and about your financial future, right? So I'm on a different computer as usual, so if I look kind of funny, it's not me, or maybe it is me, but it's the screen, okay? It's the computer. So, all right, let's get started. So I feel that there is a huge problem with the education system, all right? They don't teach you anything about finances. So they teach you everything about college though, right? So if you don't go to college and you go into the real world like I did, all right, you're not gonna know much about finances, right? About paying bills, okay? About a mortgage, what a mortgage is, about lines of credit, about loans, about investments, about credit cards. They don't teach you that in high school, okay? So with my financial background, I've been in banking for 10 years now, okay? That's a decade. Crazy, because I'm only 26. But what I'm going to show you guys, okay, is basically, this is my dream, all right? I really want to change the education system and add a financial course to it, because that would be amazing. But I know that's not a one-woman job. So in the meantime, what I want to do is I just want to do a course, okay, of webinars, providing you guys some financial education. So make sure that when you see these webinars, because they're going to be every Wednesday for the month of September, so make sure that you're sharing it with friends, with family, with whomever that you feel, you know, needs this education. Also know that these webinars are also being recorded. So if you happen to miss one, just shoot me a message, or like I said, subscribe to my YouTube, and you're going to get access to all of my webinars that I've done and all the ones going forward. All right. So let me know that you're getting value from this webinar by commenting below in the comments, because you are viewing this on YouTube. Also make sure that you subscribe so that you get future alerts for future webinars. All right. So let's get into it. Now, I wanted to tell you guys one thing before I turn it over to the notes, because I do take notes on screen. I'm actually going to see, and I'm hoping that my financial advisor, my personal financial advisor, is going to be coming on the last Wednesday in September, all right? And I'm going to have him provide you guys with some information about 401ks, about life insurance, about things that you may not know about. But if you work a job, okay, these are things that may have been put in front of you. And if you were like me, all right, when it was first presented to me, I was like, 401k, 50, I don't know what a 401k is. What's a 401k? What does it stand for? Like, it's confusing, right? Finances are confusing. And that's because we aren't educated on it. So that's why I'm here tonight. I'm going to be educating you guys about finances, and tonight's subject is about credit. All right, I'm going to show you guys some strategies for you guys to really, you know, create a strong financial future for yourselves when it comes to credit. I'm going to teach you some ways that you can rebuild your credit yourself, and just some tips that I feel that you guys should know, things that I found out and I feel like you should know. So without further ado, I'm going to share my screen. So please shoot me a message and let me know that you can see my screen. And I closed out a Word. So let's open that up. Let me know if you can see my screen. All right. Let me know, let me know. In the meantime, I'm going to type this out. If you've been on my previous webinars, I usually have fake nails on, but I actually took them off, and I can type so much better. I don't know about all you other ladies, but I love having my nails done, but when it comes to typing and doing webinars, oh, it's a struggle. But let's see. We'll make that really big. All right, cool. A little smaller. Alrighty. Cool. So what I want to do first is I want to read you guys a quote that I found. Okay, and it's actually like a descriptive quote about credit. All right. So credit is essentially your reputation as a borrower, and it tells others how likely you are to repay your loans, right? So it's going to show them how you're financially accountable and financially responsible. Because as more decisions in today's economy are based on credit, it has become an area of our life that is of utmost importance and requires attention. Makes sense. I was like, oh my God, I love that. I have to put that in my webinar, right? Makes sense. So let's think about it, all right? Without good credit, it's going to be really difficult to, obtain life's necessities. For example, okay, a car, a house, an apartment, electric, cable, water, a phone bill, okay? Pretty much every employer and every utility requires a credit check. Insane, all right? So here's the perspective that I found out when it comes to employment. So I really wanted to know, what's the reason behind why employers really want to check your credit? Why? Okay, is it, do they just want to know your business? Do they want to know, like if you shop at Victoria's Secret? Like, what do they want to know, right? So they actually feel that if an employee has significant debt and financial problems, which really does include their credit score, it would cause the person to be stressed, right? Stressed at the workplace, which therefore they might not perform their job at the best of their ability. It makes sense, right? And because of this, more and more people are stuck in subpar situations that have no hope of coming out of it. And I'm here tonight to let you guys know that there is hope, okay? So on tonight's webinar, as you can see, I'm going to be giving you credit building strategies to reach your financial goals in 2015. Keep in mind, I know it's September, all right? I know there's only a few months left of this year, but that doesn't mean that you can't make a change now when it comes to your finances, because let's face it, it all comes down to bad habits. And I know this firsthand, all right? Like I said, I graduated high school, started working a job. Even though I was in banking, the bank still didn't teach me right off the bat about finances, okay? I had to ask questions. I had to look it up myself. I had to educate myself. And that's what's important, is education. So that's why I'm here for you guys today. I'm going to bring you guys some hope for your financial future, all right? So let's get down to it. I'm going to write here what the 3 subjects, not exclamation point, 3 subjects that I'm going to be talking about tonight, all right? So the first one is what you should know about credit scores. Number 2 is steps to rebuilding your score. And number 3 is credit card tips. And this is going to be great if you have a credit card, or maybe you're thinking about getting one, all right? So this is going to allow you, if you don't have one, it's going to show you you know, some habits, some good habits that you're going to want to instill within yourself when you go to get a credit card, what to look for, and so on and so forth. All right. So here's what you should know about credit scores. Oh my gosh, why do I keep doing that? All right, so maybe taking my fake nails off didn't really help. Maybe I just can't type. Okay. Here's the thing you should know, all right? Anything that is negative or any bad reports on your score are typically there for 7 years. That's a long time, 7 years, all right? And this is still the case even if you've paid off to a collection agency, all right? And that 7-year mark is not from when you opened the account originally. It's from the last date of activity, okay? So for example, if you have a credit card that you opened 20 years ago, and let's say you stopped paying the card, okay, you went delinquent. The day you made your last payment is when that 7-year time clock begins, okay? So anything that is negative, bad reports on your score will remain for 7 years. And I'm going to put in parentheses typically, okay? And I'm also going to write that time clock, 7-year countdown starts at last activity, not from when account was opened. Okay, and when I say when account was opened, I'm talking like when the credit card was opened, when the, you know, the loan, when you went to signing and you signed for the loan, whatever it may be, okay? Also, after the 7 years, your items do not always come off automatically, all right? This was a question that I actually had somebody ask me. Is it true that after 7 years that it automatically just falls off? Sometimes yes, but a lot of the times no, okay? Creditors really don't want to help you, if you haven't noticed, okay? They really, I feel like they really enjoy putting negative reports on your credit. They don't want you to have good credit, right? That's how it feels. So let's say, you know, after your 7 years, it doesn't fall off, all right? Here's something that you can do. You could write a letter to the creditors disputing it and request removal, all right? So after your negative items come off your report automatically. After, whoops, 7 years, not, okay. You may have to write a letter disputing and ask request removal, okay? So I really wanted to find out too, what really makes up your credit score, okay? Like what is the percentage? Like if you look at it, let's say like a pie, all right? I wish I could draw it on the screen, but I can't because this is not a touchscreen computer. But I'm gonna let you guys know, all right? So 35%, this is the biggest chunk of your credit score, of your overall score, is payment history, all right? So payment history equals 35% of your overall score, okay? That's crazy. So payment history includes, you know, like if you have late payments, if you pay on time, how much you pay, so on and so forth, all right? And I'm gonna give you guys some more tips on that as well throughout this, all right? 30% is credit accounts. And now these are the accounts that you have on your credit report. Fine. And that's the second biggest chunk. So I'm pretty much going to go down the line here. All right. Now, 15% is length of your credit history. Now let's say, you know, you turn 18, you go to get a credit card, all right? Actually, there's a law. So I don't know if you guys know this or if you saw, but there's actually a law now that you can't get a credit card unless if you're 21. Now, and that comes with stipulations as well, all right? So you have to have great income. You have to have a credit or a checking account that has been in good standing for some time, and you have to have, you know, a really significant income as well. And they want to make sure, you know, because they feel that, you know, a lot of young people just get credit cards so that they can spend. So I guess this law is going to help a little bit, but I feel like it's really not, you know, because the school system and kids are still not being educated, right? So this is why it's important that we educate. So the length of credit history, 15%. Yay, there we go, okay? Now, 10% is your credit usage. Oops, credit usage. And that means when I say credit, when I say credit usage, that means, sorry, I'm trying to, okay. So when I say credit usage, that means like your debt to income. So I'm going to go into that a little bit more throughout this too, but that's what that means. All right. And finally, the last part is credit applications. So this is how many times you've applied to get credit. So equals 10%. I feel that if I would have known this, you know, I may have gone about my payments a little bit differently, right? So next, I really want to tell you guys the scores and how they vary, because I didn't know, you know, what was really considered an excellent score versus like what's the worst score that you can get, all right? So excellent ranges from 750 to 850. That's an excellent credit score, okay? A 700 to a 749 is very good. A 660 to 699 is average. And you really don't want to go below a 660 at all, because you're not going to be able to get anything, okay? And if you do get anything, because it doesn't mean you can't get anything, but if you do get anything, you're going to have really high interest rates, which is not good. You don't want that, all right? More money out of your pocket. And you want to be able to save your money, all right? So there are the credit scores, all right? So if you have not looked at what your credit score is, go to creditkarma.com, and you can actually go there and get a free credit report. And legally, you're actually entitled to get one free credit report per year. But with that, Credit Karma, you actually do get it for free. I don't even think they ask you to put, it's been a while since I looked, but I don't even think they ask you for credit card information. Like freecreditscore.com, they do. They'll charge you. I think they give you like a week free trial, and then after that, they'll try to charge you. So just a little tip on that too, all right? So, two things, all right, that impact your score and really determine it the most are your payment, like I said, your payment history and the amount of debt you owe versus how much credit you have, all right? So, payment history. Debt owed. Okay. Also, revolving credit, which are like credit cards, okay? They weigh more heavily against you than personal debt. Personal debt, for example, would be like a mortgage, a car loan, anything like that, all right? So revolving credit, I'm gonna put CC so you mean credit card, so that you know that's credit cards, okay? Weigh more heavily against you than a personal debt, i.e. mortgage or car loan, okay? Now letter C, I almost said number C. Letter C okay, is the number and severity of late payments. And that also highly impacts your score. That actually impacts your score like crazy. And I'm actually going to say this later, so you'll hear me repeat myself. But with a late payment, all right, so if you have really, really, really good credit, and let's say you go delinquent, okay, and you forget to pay 1 month, there are some things that you can do. But if you have a really good score, it could potentially drop your score 100 points, which is a lot. I mean, let's look here, you know, like if your credit score was average, okay, the lowest for average is a 660, and you got dropped down to a 560, that automatically puts you in the worst. Like, that's insane, right? So even if you were at an excellent and that dropped you down 100 points, still that's going to put you at a 650. So that then puts you, oh my God, it puts you all the way at poor. Like, that's insane, right? Okay. Sorry. So number and severity of late payments. So severity of late payments means like how long you've been late. Okay. Letter D is age and type of accounts that you have on your report. Now, when I say age, okay, it's how long you've actually had them on your report. So age and type of accounts you have on your report. I'm going to give you guys a ton of notes tonight, so I hope you're ready. Another thing as well is public records. All right, crazy. So that ends the first topic, and I really feel like, you know, that gave you guys some great information. You know, when I was really researching this even more, I really found out a lot of information that I didn't even know. So I know for a fact that I'm giving you guys some information that you may not even know yourself, right? Okay, so now subject number 2 are steps to rebuilding your score. Why do I keep doing that? Oh my goodness. Steps to rebuilding. Because, all right, here's the thing. Just by making a few adjustments, you know, you can definitely make a positive impact on your credit score. And you can even potentially raise your score within a month's time. And that's potential, that's not guaranteed, but some of these steps that I'm going to give you, you know, are really going to help you out to rebuild your score, all right? So, letter A. Let's see if it doesn't line it up where I want it. Okay, so letter A. Pay your bills on time, okay? Pay them on time. If you need to set a reminder, all right? If you need to set up auto pay, do it. Do it, do it, do it. Set a budget for yourself. Figure out how, because I'm going to talk about this I think next week is budgeting. But something that I do is I've added up, you know, all of my debt. I figure out how much I pay every month on everything. And I've broken it down so that I know how much money I need to have in one account, because I have one account for bills and one account for spending, and then I have a savings, okay? So I put it in one account, and I have auto pays set up so that every month I don't even have to think about it. You know, like there were times, excuse me, there were times before, you know, where I would be like, oh my God, did I pay my Discover bill? Did I pay my Victoria's Secret credit card? Like, I don't know. And then I'd look and I'm like, oh my God, I'm late. I didn't pay last month. Like, that's not good. Don't do that to yourself. So make sure that you pay your bills on time. All right. Another great tip for paying your bills on time, direct deposit. Okay. Something cool that you can actually do. I spoke on this on my last webinar that I actually brought a special guest on. But direct deposit, you can actually split your direct deposit into multiple accounts. You can split it up between like a savings account, a checking account, and this is great because I'm the type of person, like, I can't see it. You know what I mean? Like, I can't see the money because if I physically touch the money, I'm going to physically spend the money, all right? So direct deposit is a great thing to look into if your employer has it. If not, then I would definitely, set up those auto pays and set up those reminders. And even at the beginning of the month, see if you can deposit the amount of your bills for the month or half of it if you get paid twice a month. I think you get the picture. So I'm going to stop rambling about paying your bills on time, but pay your bills on time. Okay. Letter B. You want to keep your accounts open and at good standing. All right. So keep standing and in good standing. Because when you close an account, like I said before, it can significantly drop your credit score like crazy. And it impacts what they call debt to credit ratio, okay? If you cancel or close, sorry. Okay, so for example, all right, let's say you have a credit card with a $10,000 limit, which sounds really good, right? With a zero balance, okay, and you have balances on your other card, or if you have multiple cards on your other credit cards, okay? Now, by closing that, you're going to raise your debt to credit ratio. So you only want to close accounts that are costing you money or that you're not disciplined enough to use. That makes sense, right? Okay. Now, like I said, if you're going to miss some of this stuff, this is recorded, so don't get sad because you'll be able to go back and actually go over it again, okay? Another thing, pay off any collections. Now, I've been through this as well. I've been with the collections thing, okay? What you want to do is you want to call the creditors or the collectors and you want to try to work out a payment plan. Because let's face it, okay? They would rather get some sort of money from you than not getting any at all. So they're going to negotiate with you and they're really going to, try to get as much money from you as they can, but you can fight with them on it and get a payment that's going to work for you because you really do want to pay it off, okay? Now, letter D, okay? So once you have a higher score, I had mentioned this earlier and I already said that I was going to repeat myself, but once you have a higher score, you really need to make sure that you're diligent about keeping on top of your payments, right? In fact, you should really pay over your minimum balance. And like I said before, you want to pay your bills on time. And I like to pay my stuff early because if for some reason, something happens with my computer and I don't know, if something was to get messed up, then I have a few days to make sure that it actually went through, right? So let's say you have a credit score of 760 and you get a collection claim on your score, all right? This is where I said it can drop to over 100 points. Insane, right? So if you have a lower score already, it's not going to impact you as greatly as it does with someone with a good credit score. Excuse me. So once you have a higher score, keep on top of your payments. All right. Letter E. Like I said before, you want to check your credit at least once a year. And in doing that, you're going to want to look for mistakes or any errors on your report. And like I said, you can check it for free legally once a year. And when you're looking for the errors or the mistakes that are on your report, you're going to be able to catch something early enough, that could have impacted you in maybe even a negative way had you not checked your credit report. So, let's face it, okay? Humans make errors. I make errors all the time. So who's to say that your credit report is 100% accurate, right? You don't know if it's 100% accurate unless if you're actively checking it and making sure that it's good, all right? It's super important that you stay on top of it so that you get, in turn, good credit score, and get it to where you really want it to be, okay? So I'll type here, look for mistakes and errors. All right, subject number 3 is credit card tips. Not tops, tips. Good Lord. Okay. I need to stop. Oh my goodness. I hate Word. All right. So when you're applying for a credit card, all right, you want to look for a card with a low interest rate. I would say, you know, anything under 10% is pretty decent. And I always like to make sure that I don't have an annual fee. Now, that might just be me. I don't like to pay an annual fee, all right? But if you don't mind doing that, then I wouldn't let that, you know, stop you from getting a credit card. But you want to also look for credit cards that have like rewards programs, maybe even like cash back or like a point system. But you want to make sure that you're reading the fine print, all right? So when you want to look for low interest rates, no annual fee. Good Lord, is that Facebook? And reward programs, cash back, point system. Let's see. Point system. That makes sense. All right, cool. Oh, and read all the fine print. That's a good one. You need to do that. Make sure that you do that. Read the fine print. All of it. Okay. So letter B. Okay. You want to pay your credit cards on time every time. And like I said before, set auto pay, set reminders, okay? And when you're doing that, you always want to pay 30% of your total credit limit. So pay on time and pay at least 30% of your total credit limit. Bear with me one second. I want to close out of Facebook if I can even find it. Oh my goodness. Oh, thank God. That was so annoying. Okay. All right. So pay on time and pay at least 30% of your total credit limit. All right. Also, letter C, don't close your credit cards. Okay. Because like I said before, it'll reduce your available credit. Okay. And in fact, like here's a tip for you guys, or a fact. 14% of the US population have more than 10 credit cards. I don't think I have 10 credit cards, but 14%, that's a lot. 14% of Americans have at least 10 credit cards. That's scary to me. Can you imagine the amount of interest that they're paying? Insane. So my advice to you guys, okay, this is something that I've recently done. My advice is to have one good credit card, okay? Something with a low interest rate, no annual fee, like I said, or even a low annual fee, and with those reward programs as well. If you get one credit card, okay, you can even pay off some of maybe your higher interest rate credit cards, like I said before. That way you're not paying as much money out of pocket when it comes to that. So that brings me to the next subject, which is consolidate. That's what that's called. It's called consolidating, okay? So meaning you want to transfer your debt to a higher limit credit card with a lower interest rate, okay? And this is going to lower your monthly payments overall. So transfer debt to a higher credit limit card. Lowers monthly payments overall, right? Now, this is also another thing that you can do, okay? You can prove yourself. And now when I say that, okay, I mean, you could open a new credit card and start completely over from scratch, all right? And if you do this, you know, you want to keep the balance low. You want to make sure you make your payments. And here's another fun fact, right? 37% of credit card holders pay their credit card bills in full each month. Now, I used to think that that was insane. Like paying off your whole credit card, but this was like years ago before I really knew what I was talking about. Okay. But now when I think about it, I think it's actually pretty smart. You know, like if you were to pay some bills on a credit card and then pay it off before the month's end, you're not going to have to pay the interest on that. The interest accumulates, you know, when you carry a balance over time. So it's just going to keep compounding and compounding, right? So that sums up the educating for tonight pretty much. But one more thing, okay? I wanted to tell you about the company that I am actually with, okay? And this is something that they had said, okay? I'm going to read this to you guys. Our holistic approach helps participants fix their money issues, which in turn fixes your credit. Instead of the score being the sole focus, we put together a plan using financial wellness principles to keep the credit at optimal levels. Like, that's insane. This company, all right, is going to teach you good financial habits. And, you know, maybe you're in a bad situation. Well, you're going to be able to use some of the tools that we provide you to really get yourself into a better position financially, even to the point where you could start making an extra income part-time from home, right? So, did you know in 2013, 40 million Americans had errors on their credit report? Like I said, humans make errors. We're not error-free. I make mistakes all the time. I'm sure you guys do too, right? So, like I said before, like who's to say that your credit report is 100% accurate? You don't know that. So you want to make sure that you're checking that. And that's something else that we can actually help you out with are those errors, okay? So with our company, you're going to get improved and optimized credit. You're going to, and this is not guaranteed that you're going to get that, but most likely you will, okay? So personalized dispute options, access to case statuses and updates 24/7. You're going to be able to correct past financial problems. You're going to have be able to go over questionable collections, late payments, old debts you want to pay and settle, and overall raising your credit score, all right? So I'm going to take it back to me so that you guys can actually see me now. Hey, so I hope that you guys got a ton of value from this, all right, and stuff that you're going to be able to actually educate your friends and family. You know, you can actually send them the webinar as well. Now, with the company, okay, that I am with, if you're interested in learning anything more, reach out to whoever invited you to this webinar. Or if nobody invited you and you got an email from me or got a message from me, reach out to me. You know, I understand what it's like to be in a really bad financial situation. And I even had a little bit of knowledge, okay? But with this company, they had taught me even more that I didn't learn in my decade of being in banking, which is insane. So I know that because it's changed my life and created good financial habits for myself, I know that it can do the same for you, okay? And if you have any questions, like I said, please reach out to the person that invited you or get back in touch with me. So next week, we're going to be talking about budgeting. So I will be sending you guys out a link for that next week. Also, make sure that you register. If you didn't register this week, that's okay. You can still do it for next week. It's a great way to get alerts and you get the link sent right to your email, right? You can subscribe to my YouTube, like I said. If you got value from this webinar, please comment below the YouTube screen. But I know it's getting late, and I know I had technical issues, so I don't want to make this any longer than it already is, because I could ramble on forever, right? But I hope that you guys got some value, like I said, and I hope you guys have a great night and a great weekend, and I'll see you guys here next Wednesday. Take care.